Russia has 16% of their $640 billion of reserves in dollars. They have 32% in euros. So they have almost 50% of their reserves in currencies that are controlled by people who want to do them harm. Now, I think we should do them harm. But the point is, from Russia's point of view, that's not a great position to be in.
Billionaire investor Bill Miller believes the ongoing geopolitical tension between Russia and Ukraine can be very bullish for Bitcoin. In a recent interview, the fund manager and philanthropist explains that a considerable percentage of Russia's reserves are stored in dollars and euros. Considering the ongoing massive friction between Russia and the West, this puts the European country in a pretty tight spot. While you may argue that Russia has provoked the sanctions against it, this could happen to any country, anytime, even when they are not attacking their neighbors. Miller explains that Bitcoin ends the dependence on currencies, such as the dollar or euro, which give their owners immense control over other countries. Welcome to Savvy Finance. This video examines Bill Miller's thoughts on how the Russian-Ukraine war could make Bitcoin bullish. The billionaire investor also gives his thoughts on quantitative easing, recession, and the current state of the U.S. economy. If you find this video informative, don't forget to click the like button and check out our other crypto-related videos. Thanks for your continued support. It is immensely appreciated. In his interview, Bill Miller talks at length about the great attributes of Bitcoin. First, it is not controlled by any country, which means no government can use it to control other countries. Throw in the assets, fixed supply, and other great attributes, and you have a great cryptocurrency that Miller believes stands out from other cryptocurrencies. Here is the billionaire explaining the supremacy of the world's biggest cryptocurrency.
I think that basically, if you look at Russia right now, Russia has 16% of their $640 billion of reserves in dollars. They have 32% in euros. So they have almost 50% of their reserves in currencies that are controlled by people who want to do them harm. Now, I think we should do them harm. But the point is, from Russia's point of view, that's not a great position to be in. They have 22% in gold, and that's the only part of their reserves which other countries can't control. So I think if you're a country out there that is a non-reserve currency, there's about 100 of them, you might think about saying, you know what, maybe we should have something else out there that other countries cannot harm us with, and that is impervious to inflation or to being manufactured in greater quantities. And so I think it's very bullish for Bitcoin particularly. The rest of crypto is different. I think Bitcoin is unique, and the rest of crypto should be considered as a sort of venture investments because they're all trying to solve other problems.
Miller also gives his thoughts on the stock market. The billionaire investor explains that the volatility we have seen over the past months is largely a response to the fear of recession. However, Miller believes the economy is strong enough to avoid one. He also states that there are still opportunities worth pursuing in the market. Here is Miller's detailed explanation of the current market situation.
Yeah, there's emerging opportunities in the market. We're at the beginning, early stages of a regime change. So from a Fed easing, accommodative bond buying set of policies to one that's the opposite. So draining the Fed balance sheet or down, raising interest rates, and that raises the possibility that they can make a mistake. I mean, they're not flawless, obviously, and so you've got what's happening with volatility is you're getting some probability of a mistake, of recession priced in, and that's I think something that you're going to have to live with for a while until it's clear that doesn't happen.
Yeah, so are you in the recession camp? You know, we are all watching the yield curve. We all have memories of the past decade when the Fed tightened too quickly and had to keep undoing that. So do you think investors should be braced for that possibility, or do you think that it's not going to happen, it's just creating some entry points?
You know, I mean, one of the things that we try and do is try and not make forecasts about what's going to happen, just try to understand what is happening. So what is happening is the Fed is signaling a tighter monetary policy. What is happening is the economy is very strong, unemployment's low, earnings for many companies are at records. State tax receipts are rising way above expectations. Credit card usage is high. And so all of those things, the stimulus is tremendous. So all those things say that the economy is strong and a recession is not on the horizon. Doesn't mean it can't appear, but that's what's going on now, and we're trying to invest in this particular environment and not one that we really can't forecast.
Miller also talks about interest rates and whether or not the proposed hikes will do any good. While declaring that bonds have all but lost their value, he states that too many interest rate hikes will do no good for the economy. Moderation, Miller says, is the key. Listen to the billionaire's explanation here.
Well, real rates are still sharply negative, and especially if you just use headline inflation. So I don't think the bond market is attractive at all. I think the Fed wants to tighten. They would probably like to see the curve steepen moderately, and we just don't see any value in bonds here.
One more question on that. Do you have a point of view on whether it'd be better for them to run down the balance sheet? Some say maybe that would help long end rates go up. It would unflatten the curve, but who knows, right? Or would you prefer to see more rate hikes, 50 basis point rate hikes? Anything there that you're watching?
We've been kind of wondering why they're still buying mortgage-backed securities into this kind of a housing market. So I think both of those things in moderation make sense. So letting the balance sheet drain off of some of the securities that they own, as well as moderate tightening. They're signaling very strongly that they're not going to try and tighten too much. They're going to be sensitive to a recession. Doesn't mean they'll get it right, but I think they're looking at the right things.
Though the situation is quite unfortunate, Miller is not the first person that has pointed out that the current geopolitical tension in Ukraine can be beneficial to Bitcoin. So far, the Ukrainian government has raised tens of millions of dollars worth of cryptocurrencies through donations. There are also gut-wrenching stories of Ukrainians fleeing their country with nothing but the clothes on their backs and their Bitcoin wallets. Through it all, Bitcoin has been a beacon of hope. How has Bitcoin impacted you? Please share your stories in the comments section below. And don't forget to hit the like button and stay tuned to Savvy Finance. Thanks for watching the video.